In this video, we're going to explore the source documents that verify cash transactions. We'll start with cash receipts. This source document is a cash receipt. Imagine we are Jerry's temp agency. Therefore, we are the ones who are issuing this source document. And we can see here that we are issuing this receipt to someone named T. Downey. In this case, this is a cash receipt to verify cash received from the customer, T. Downey, for secretarial services totaling to $660, including GST $60. Here I'm going to show you how it works when the business issues a receipt to the customer. So imagine the customer purchases goods or services from the business, and here the business writes out a receipt for the customer. The original copy is given to the customer, while the business keeps the duplicate copy. Note that with the use of computers, the duplicates are basically the records that have been saved in the computer software. Let's see if you can remember this. Who keeps the original copy of the document, and who keeps the duplicate copy? The original copy is kept by the customer, T. Downey, and the duplicate copy is kept by the business, which is Jerry's temp agency. How about this source document? Have you seen something similar? This is still called a cash receipt. To be specific, it is a cash register receipt, something you would also receive when you are buying something from Kohl's. Again, as a customer, the customer would receive the original copy, while the business keeps duplicate copies of the cash register receipt. Can you identify the GST amount in this transaction here? The GST amount is clearly stated and it is $12. Now this time, let's assume we are Fashion House. Identify if the GST amount is payable or refundable from the ATO. In this case, the GST is part of a cash sale. The GST is collected on behalf of the ATO. Therefore, it is a GST payable to ATO. Now we are Office Works. How has the customer paid? If we look at the document closely, we can see that a payment has been made using a Visa credit card. So the customer has paid using a Visa credit card, and this is called a credit card receipt. Note that the business usually keeps a merchant copy, while customer is given a customer copy of the credit card receipt. This leads us to our next question. If the customer has paid using a Visa credit card, does this mean that the customer still owes Office Works? No. From Office Works' view, the money has already been received from the customer. The customer does not owe Office Works. With credit card transactions, the credit card provider pays Office Works on behalf of the customer. In this case, the customer then owes the credit card company $110 for the amount spent. Here's a diagram to show how credit cards work. Once the customer has used the credit card, the bank will transfer the funds directly to the business. So from the business perspective, the payment has been received, and the goods and services are provided to the customer. From the customer's point of view, the customer now has an obligation to pay the bank back for using the credit card facilities. There are other source documents that can be used to verify cash receipts. Electronic funds transfer, EFT receipts, can be used to verify internet banking payments received from customers. The bank statement can also be used to verify cash deposited into the bank account. Now we'll look at the source documents to verify cash payments. Have you seen this source document? This is a check, and it comes in two parts. The first part is called the check butt. This part is kept by the business for records of payment made. The second part is the check, and this part is given to the supplier whom the business is paying. As mentioned in the previous slide, checks are used to make cash payments. Here I'm going to explain to you how checks work. When the business pays the supplier with a check, it keeps the check butt for its own records of payment made. The check is passed to the supplier to make the payment. The supplier then deposits the check into his bank account. The bank then processes the check, and the money will transfer from the business bank account to the supplier's bank account. Here's an example of a check butt that has been retained by the business. We can see here that it is a cash payment to PJ Hacker for monthly rent, totaling to $1,800 plus $180 GST. The total amount of $1,980 will be the amount that is taken out of the bank account and paid to PJ Hacker. As the business makes payment for the rent, explain if the GST is payable or refundable from the ATO. This is a GST on cash purchase. In other words, it is a payment of expense. The GST is forwarded to the ATO by the supplier on behalf of the business. Therefore, GST will be refundable from the ATO. Do you know what this source document is? If you have withdrawn money from your bank account from the ATM, this might look familiar to you. This is an ATM document. From this ATM document, we can see that $100 was withdrawn from the check account. The owner has withdrawn $100 from the business bank account for personal use. Note that in reality, sometimes cash can be withdrawn from the business bank account and used to pay for business expenses. In this subject, you will be specifically told if the cash was withdrawn by the owner for personal use. Here are other source documents that can be used to verify cash payments. EFT receipts can be used to verify internet banking payments made. The bank statement may also be referred to verify cash payments made out of the bank account. Original cash receipts given by the supplier may also be used to verify a cash payment made to the supplier. Here's a quick discussion about the bank statement and how it can be used to verify both cash receipts and cash payments. Here's an example of a bank statement. Here we have the dates, and in this section we have the details of transactions or balance. The debit column shows all cash payments out of the bank account. The credit column shows all cash receipts, which is money coming in to the bank account. The balance shows how much we have in the bank account, or how much we owe the bank if it is in overdraft. In our closing balance, we can see that we have $3,920 of available funds in the bank account as at the end of the month. This is an asset to the business.